Circle Internet Group stock fell from all-time high of $263 to about $73 at the time of this recording. It has a market cap of $17 billion. Now, not long ago, there was a lot of hype about the stock post-IPO. So is this a 10x stock or does it go to zero? This is what I'm going to cover in this video. Don't forget to smash that like button, subscribe to the channel, and let's continue growing together. Please note, this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about Circle Internet Group. In full disclosure, I do not own any shares or options of Circle Internet Group. Now, let us first look at the company description. A Circle operates as a platform, network, and market infrastructure for stablecoins and blockchain applications. The company provides a suite of stablecoins and related products that include a network, utility, and application platform for organizations to benefit from stablecoins and the internet financial system, and issues a US dollar denominated stablecoin. Now, in case you're not familiar with stablecoins gained prominence recently after the Genius Act. As there is government involved, institutions are getting more comfortable with stablecoins. Stablecoins can facilitate faster and cheaper cross-border payments by leveraging blockchain. Stablecoins allow unbanked and the underbanked populations to access digital dollars through cell phones and mobile wallets. Stablecoins are pegged to fiat currencies like USD, offering stability. So the question is, how does Circle makes revenue? It makes money through interest income on USDC reserves. Since Circle issues USDC, which is pegged to the US dollar, they hold the cash in short-term treasuries, which can get them interest income. Another way Circle makes money is through infrastructure and API services. This is their growth engine. Currently, they make very low revenue with this segment, but this is expected to expand in the future. Now, let us look at how the margins would be. How are the margins for this kind of business? So for the past few years, margins have been that. Gross margins ranged between 5% and 32%, while operating margins ranged between negative 6% to positive 17%. This is quite random, and this makes the valuation quite difficult. So now I will show you the valuation. Remember that Circle is a $17 billion in market cap. Let us focus on the bear case first. So if there is regulation clampdown, interest rate volatility, and a loss of market share to rivals like Tether, Circle can suffer a massive blow. Revenue can drop to below $1 billion due to shrinking stablecoin market and compliance burdens. This will make Circle positive, negative, post-negative margins continuously, and they will run out of cash and go bankrupt. This is a scenario we need to keep in mind since we are dealing with business that has a lot of uncertainty. So in the bear case, it can go to zero, which is really concerning. Now I will talk about the bull case. So in my opinion, a lot of things have to go right for this to happen. If there is a widespread stablecoin adoption and USDC dominates global payments, if there is also regulation on clarity, and if banks and fintechs are willing to partner up with Circle, then Circle can post over $15 billion in revenue by 2030. In addition, we have to assume Circle makes a lot of interest income and other software services income to improve margins significantly to 15 to 20%. In this case, when I apply a price to sales multiple of 10, this can be $120 billion to $150 billion company. So from the current price of $72, this can get to $500, which is a 7x opportunity. But this is highly unlikely in my opinion. So I would not count on this scenario. Now, finally, let us focus on the base case, which I believe is likely to happen. I assume moderate adoption of stablecoin, moderate compliance cost, and Circle maintains decent market share and gains steady interest income. They will enable them, that will enable them to get to $5 to $7 billion of revenue by 2030. Margins remain thin at 5 to 8% due to compliance and tech costs. In this case, I will apply a price to sales of 5, which gets me about $35 billion company. Right now, it is at $17 billion, so I can expect a 2x return in 5 years. So the question is, am I investing in this stock since this is getting me a 2x in 5 years? The answer is no, I am not. Because the risk reward is not great since this has the risk of going to zero. I need a greater reward than the 2x in 5 years to stomach the risk. So unless I get a 3x or more, I will not consider this stock. So for that to happen, Circle stock has to fall below $50. If it does fall below $50, I will consider. What do you guys think? Let me know your thoughts in the comments, and thank you so much for watching.